Hey traders, very warm welcome to you. Okay, so constructing a trading plan can be quite tricky. Okay, sometimes you think, well, you know what, I need a massive plan, I need this, I need that, I need the other, and I recognize I've done a few videos on this channel already. We talked about constructing a trading plan. We've gone over some of the summaries, we've gone over some of the bits and pieces, but what I wanted to do for you guys, subscribers and non-subscribers, if you've kind of stumbled across this, is do a really much more in-depth, comprehensive analysis, if you like, or deep dive into creating your trading plan. Now, I've got some slides together for you. A little bit different this time. It's going to be multiple videos, so make sure you kind of watch them all in sequence. This is the first one of a multi-part series, and this is a presentation that I did to some of the guys and girls in the Traders Club that I run. And so I thought, you know what, my subscribers on YouTube are going to appreciate this as well. So we didn't get a chance to record it actually live, so what I'm doing now is for you, to me, into the camera, and we'll talk about this. So, multi-part video series, trading plan, let's go. So when we talk about trading plan, guys, we talk about, for me anyway, there's two kinds of trading plan. Number one is the actual nuts and bolts of the strategy you're going to employ. And number two is the overall plan of how you're going to run your business. Now in this video, on this video series, we're talking about the latter. So we're talking about putting everything together. And in my eyes, the strategy you're employing fits within that. Okay, now we'll talk about some little strategies as well later on in the videos. But for me, trading plan is how you're going to approach trading as a whole. And so it's very, very important that we look at everything we need to, because ultimately, you know, if we get one thing wrong, you're going to be off track. So if we look at why we need a trading plan, okay, the first thing for me is we need to have an idea of what we're trying to achieve and where we're trying to go. Now, if you think about human nature, right? Human nature in trading, it goes against us. We've seen all the psychology, I've done videos and talked about how people generally are not very well placed to take risk. We're loss averse. We have all these kind of, human beings generally aren't good traders, right? We know ourselves from a discipline perspective, emotional perspective. We need to, from time to time, kind of adapt ourselves to learn and to behave differently in a trading environment as we do in the real world. We don't just go deep into that. So the point is that without a plan, you are almost guaranteed to lose money over time. Now, I know it's a bold statement to make, and some people may disagree, but I genuinely think if you don't have a plan of action of what you're going to do, you can expect to lose. I don't know any trader at any level, with any success, from whatever level we're talking about, right up to, you know, people who I don't know but I've read about and studied, who don't go in without a plan. And if you think about things in general, okay, think about all sorts of sectors. What other sector or business thrives without a plan? And I know we're kind of banging the drum about talking about, yes, you know, blah, 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 trading's a business, but it is. If we want to make money and want to do it seriously, we've got to have a plan. If you think about a pilot, okay, a pilot, he has a plan, he's got his checklist, he knows where he's going to fly, he knows the heading, he knows the wind, he knows what he's got to avoid, he knows where he's going to change direction, all this kind of stuff. He knows his waypoints, he's got a plan. He doesn't just go up, fly the plane and go, oh, I think it's that way. He's got an idea and a plan of action of what he's going to do. Yes, the plan may change, but he's ultimately got a foundation plan. Same if you think about if you're opening up a restaurant, right? You're opening a restaurant. Who are my suppliers going to be? You know, what's my chef going to be? What type of food am I going to offer? What opening hours? You have a plan of action. Now that may change, but you still have a plan. Look at a retailer, same thing. Builder, you don't just roll up as a builder with a van, 10 men and go, right, I'm about to do your extension, where do I start? You've got a plan of action. You know, you've got to, I'm not a builder, but you've got to kind of level the ground off, lay the foundations, there's lots of things that have to happen before you get the final extension and you can put paint on the insides. So, you know, we need a plan. And also a plan allows you to have good discipline. You know, this is the point, guys, is that we need discipline. And if you've got a plan of action, you can tell if you're veering off or not. Now, that's the key thing, right? If you've got a plan of action, it doesn't matter, we're going to get to this in a moment, it doesn't matter necessarily yet if the plan is a profitable plan in the whole. There's lots of components on it that aren't relevant to profitability at all. But the point is, it keeps us disciplined. That's one of the major things that we struggle with as traders, discipline. And so having a solid trading plan allows you, if you're veering off, to recognize you're veering off and pull yourself back in. That to me is the key point of a plan, keeping you on track. And when you veer off, you recognize it, because without a plan, you don't know you're veering off. Let's go back to the pilot analogy. Pilot's flying a heading. He knows if he's veering off for whatever reason, and I'm talking probably about a smaller jet than I am, a smaller plane than I am, a kind of 747, which was guided specifically with autopilot. But let's say you're flying a little two-seater, you start veering off course, and you say, hey, well, I'm supposed to be here, I'm here, I can correct and come back on course. If you didn't have a plan of where you were supposed to be at what time, at what heading, etc., you wouldn't know to veer back off, and then you could go further and further and be way off track. So whilst the analogy is loose, I appreciate that, this is what we're trying to do. We're trying to get a plan so that we can stay on course. And the important thing is, guys, is that a plan is a benchmark to build on. We're not expecting to have the plan to go out and to knock things out of the park and to make 7 figures a year from day one. This is not going to happen. The point is, we want to start, we want to improve, we want to iterate, we want to analyze, and we're going to go through all the stages in a second of how we're going to do that. But the point is, we need that foundation. And for many traders, surprisingly enough, they don't have a trading plan. Now, before you kind of log off and go, I'm not interested in this, you don't need to be writing reams and reams of stuff. We're going to talk about this in a second, but a plan can be, notes on your iPhone. It can be a sheet of paper. It can be reams of paper if you want. It can be a very in-depth kind of PowerPoint presentation. It's up to you. The important thing is you're just starting. And the final thing I want to say, guys, before we move on, is that, listen, if you're in the markets and you're trading without a plan, accept the fact that you are gambling for entertainment. You're in the markets for entertainment, and that is fine, right? This channel may not be for you, because if you're on this channel, my guess is if you're watching this, you want to make this some kind of career, some kind of profession, whether that's part-time, full-time, whatever. You want to make some money out of it, not just from luck. Because we can all go in, we can all look at a chart, we can all take a trade, we can all make money that way. That's purely gambling. But the consistency, the positive expectancy is what we're looking for, and this is why we have a plan. So if you're trading without a plan, then that's fine, but just accept that you have a negative expectancy, just like if you were sitting at the roulette table, and that over time you will lose money. You may win once, you may win a couple of weeks in a row, but over time you have that negative expectancy, and that's what trading without a plan will do. And if that's how you're in the markets, then that's fine. That doesn't matter. You can get involved in the markets like that, but just accept that. And that's the one thing I wanted to mention. And the final thing is kind of don't moan if you lose money, if that's the way you approach it. If you want to take it seriously, a trading plan is what we're all about. All right, so let's have a look, guys. What have we got? So, creating a plan process. 8 stages to the plan. The first one is commitments and current status. Second one is time frame. Third one is the markets. Fourth one is the strategy. Fifth one are boundaries. Sixth is risk management. Seventh is the duration. Eighth is iteration. I'm going to go into each one of these in depth in a moment, but let's overview them very, very briefly now. Commitment, current status is where you are in your life at the moment. What are your current commitments? What assets do you have? What time do you have? Time frame is the kind of time frame that you're looking to trade at. The market's the markets you're looking to trade. The strategy is the strategy or strategies you're looking to employ. Boundaries are kind of things that we're doing to bring in our focus. Risk management is obviously how much we're prepared to risk on a daily basis, a trade basis, or a longer term basis. Duration is how long we're going to stick to the plan. And iteration is what we're going to do to adjust the plan.